Good afternoon, everyone. Well, I have had quite a trip. Went to Las Vegas for the money show on Sunday and just got back yesterday. So the drive was really nice, but I don't like being rushed. And on the way there, we ended up having about 2 hours of the trip where I was sitting in the middle of the desert, going about 15 to 20 miles per hour. That was a little bit unexpected. It shouldn't be unexpected because you always seem to run into accidents on that route, but had a nice book on tape though, so good Audible to keep me going. I don't know why they call it book on tape anymore. It's not actually a book on a tape anymore. But anyways, so for those of you that were not able to make it to the class, I'm going to do a nice, clean, pretty recording for you guys over the weekend. So you Liga Trader folks will find that in the bonus videos section in the members area. And basically it is 3 signs of trend exhaustion, and I used trades that were given in the Liga Traders Telegram room earlier in the week in the class, so you'll get really good explanations of it, really focusing on the momentum reversal plus in particular. Today's been a pretty good trading day so far as well. I've been working on a class for the micro e-mini futures. It's coming up, hosted by Ninja Trader. That's going to be on June 8th is the tentative date that we have at 4:15 Eastern. So mark your calendars for that. I'll be sending you guys out emails on that. So that's what I've been spending my day here working on in the background, but pretty decent market action so far. Really nice Phoenix earlier today. Good 1, 2, 3 coming out of it and held measured move highs almost perfectly. Let's see here. Let's go pull this up. I'm going to start with taking a look at what we've got going on the NASDAQ. Wrong slide. Here we go. So Harvey, you were asking, what was I talking about holding perfectly in League of Traders here? So what we had going on this morning was the turnaround from, this is a 2B in a couple of indices, not quite a 2B in the NASDAQ. But then notice how it went and did a 1, 2, 3 move here this morning. We've actually seen this pattern repeat over and over again over the last week or so, really. And it went into little 2T. And then we saw the same repetition on a bigger scale right here. Again, into a little bit of a messier 2T, is kind of more of a momentum reversal this time around. And so this is the resistance that I was talking about holding perfectly. It's that measured move. So basically repetition of the exact same strategy that came out of the open, just on a much bigger scale. So not only served as target level for those of you that were trading the Phoenix along with me, but also as a reversal strategy. I didn't quite catch that reversal strategy though. Closed my one position and that was working. On my slides, so sadly, I did not reverse. But I timed it, right? So that counts for something. You guys asked me actually, do I catch all the trades that I'm watching? And of course not, absolutely not. I've got a lot of other stuff going on. I'm happy if I just catch a couple of trades a day. That's all I'm really worried about. And I'm in and out through the day. I do other stuff, come and go. If I see something, I don't got anything else going on, then yeah, I'll catch it. But if I don't catch it, I don't want to chase something. So I try to get into something as close to the absolute trigger as possible and not worry about it if something is like moved to this level. And I know it might go further, but I'm not usually going to chase it at that point. If I get another continuation entry, great. If not, I'll just watch for the next setup. I think that's one of the hardest things for a lot of traders is to just be willing to let things go and accept that, you know what, you don't have the best entry anymore. I mean, when you're getting into a Phoenix like here, you've got measured move level here, you've got measured move level here, and you can't tell it on the 1,000 tick, but there's also measured move level here. So you have 1, 2, 3 measured move levels all hitting right at that 76.4% Fibonacci retracement. And just like we were talking about in the Telegram room here, if you go from that first low, a lot of times your timing is going to be a lot better than if you go from here on your Fibonacci fan. So it gives you really the perfect entry trigger. You can even line it up even a little bit better by going like this. Taking that and sliding this, whoops, so that your low here with the 61.8% holds the low of that first pullback. That's another little trick there. It helps you with your entry timing. And you can see that what that did was it slid these fan extensions a little bit as well. So it helps with identifying target levels also. So just a little bit of trick here, just with the current market action. And again, this series of patterns has repeated multiple times over the last week. And you'll see it continue to repeat throughout your entire trading career. You can see we're right back down to that support level here now. Overall, in the bigger market, let's kind of pull back here. Weekly time frame, we've got this huge megaphone that's been forming. Usually what happens at this point is it can continue to try to react here. So we're even looking at the potential that this can do a two-wave pullback to a correction. Not sure quite how far that move can go because it depends upon how the momentum picks up. So sometimes you'll see it just do some of the smaller little measure moves and then kind of shift. It'll bounce a little bit longer and that can shift the momentum. But if the bounce is just really minor, offers a faster continuation, then you can get a much bigger follow through. So you might have some initial continuation attempts right here that end up stunted, go into a longer base, and that can affect the overall follow through on a larger scale. So it's really watching this corrective move here at this point and to see how the momentum plays out within there. So right now we are at shorter time frame trading levels, mostly focusing upon intraday charts like the 90-minute to the 240-minute. At this point, you can see here on the daily, pretty decent V. That's actually a little bit of a larger bounce than you want to see to get a stronger continuation. You can see that's what happened over here as well. Bounced up about halfway, and that had an impact on the follow through for the initial continuation. If it bounces up less, stays under that halfway point, it has an easier time doing a more rapid 1, 2, 3 continuation. So the fact that this is pulled up about halfway here at this point makes that possibility that we had a couple of days ago, it makes it less likely. So it makes it more likely it could do a little bit of a longer correction at this point before it would have a chance to try another breakdown. What time is my webinar on June 8th? They usually have it at 4:15 Eastern, right after the market closes. Right now we've got some shorter term trend exhaustion here that we've been playing out since yesterday. We were looking at kind of a measured move zone yesterday as the next main resistance level. So that hit in the afternoon, middle of this congestion and the congestion over here as well. And we're just seeing the correction continue from this right now. So this is another zone where we've got to watch momentum, how momentum plays out, because this can still offer up another continuation move on the downside, but it has an easier chance of getting a stronger continuation if it does a shorter correction. So the longer it tries to correct out, the harder of a time it will have to do a really solid drop usually, unless it tries to go into something where it bounces really strongly, pulls back, then goes like this into more of a trading range. Because what that does is it will shift that overall channel like this, so that the start of the overall channel, even though it looks really fast right now to begin with, if it has another low that's kind of spread out a little bit further, that will shift that overall channel, gives it the opportunity to change momentum again to try to pick up momentum on the downside. So that's really one of the only ways you typically see that picking up and gaining momentum again, if it goes into more of a sideways congestion type of zone. Otherwise, if it just holds this level, goes into more of a base like that without really doing kind of that bigger V again, then that can shift that larger channel like this and allow it to bounce again, so that you end up with basically a phoenix over here. Since it's a V off of the lows, it's not the most ideal place for a phoenix. What can happen with a phoenix at this point is it can have a harder time getting going, can run into resistance at previous highs. Usually doesn't go for more than like 76.4 as your odds of getting a target that's 95% of the time will hit. It has a much harder time going to 100% extension when this happens. So we've got to watch how this forms. You know, does this do more of the sideways move here and break down? Or can it bounce up again in here, go down a little bit faster, and then shift momentum? So right now, because of our placement on the trend, we're at much more scalpish levels. So even the 240-minute chart, we're seeing things like the measured move levels that are giving us resistance, but you can't see the strategies that are forming at this point. On the larger time frame, even this 240, there's not much going on for strategies. It's a little bit too short of a correction, ideally for an inverse head and shoulders. Again, if it can do like one more little pullback there so it shifts the momentum like that, that can have a chance to try to get going with a shoulder. And so this becomes a do or die point. Does it go into that shoulder with the head and shoulders, or does it start to base out like this? And that would offer that breakdown. So then you'd be basically watching, hey, how does this reaction off of that support form? So knowing what these possibilities are, every single one of these will happen at different times in the market. And it really comes down to how the momentum plays out on the smaller scale here at this point. So your probabilities of success just like randomly picking a direction based upon the 240-minute chart itself right now is pretty up in the air. It's basically a crap shot at this point. But if you watch the momentum as it plays out at this point, that's going to shift your odds in each direction, just depending on how that momentum shifts. So right now, if you're wanting to hold for like swing trades and things like that, this isn't generally the best area to get into a swing trade. You could have gotten into some as a correction moves at this point, being aware that, hey, it might have gone into more of a congestion mode or even kind of shifted momentum on the upside like that. So you would want to use advanced trade management, protect part of your position really fast, because then if it goes against you, you can reduce your losses. That's actually what the class for Ninja Trader is going to be on the 8th with the micro e-minis. It's going to be focused on how to use those multiple contracts to reduce your risk so that you can take setups that might be more iffy, meaning you don't know if it's going to follow through quickly or more gradually, and be able to reduce a position that would otherwise be a stop to more of a scratch trade or a minor loss or a minor gain, but then still having the potential to go for those bigger gains when it does gain momentum. And that's what this zone here is like. You don't know if it's going to pick up momentum really quickly or if it could just, shift and go into some slightly higher highs. I mean, this is the same type of zone that we saw on the daily charts over in here. is that same type of zone. So when things corrected, they're holding resistance, but they only got some, little minor corrective type of moves off of that. But other times it will go into more of a base. It can go into a two-wave drop. That's actually more possible when you have kind of a shifting move like this. That's why we were looking at that as a possibility a couple of months ago, because it had a little bit of a shift. Even though these were still strong moves up here, the overall channel was shifting, which means it can either go as tilted move, pull back, create a longer range, or it does more of a tilted phoenix type of move. And this ended up being a really extreme tilted phoenix, but that's the same type of thing that can happen in here at this point as well. A little bit harder of a chance to, again, gain that momentum though, because this didn't even have that shift coming off of the lows. Let's go look at this on even a smaller scale here. Here's a 30-minute time frame. So here's an example of how that shift can take place and bring in that stronger selling. So you'll see that initially it pulled off of the high really quickly, just like what you saw on the 240-minute time frame. Then it bounced and did a second low. So what that does is that changes this momentum here. So you've got a shift like that. And then it went and had the zone of congestion, lasted about the same amount of time. And then it was able to gain momentum back to the downside. So what I just drew out for you on the 240-minute chart, that's exactly what you see happened on the 30-minute time frame. So let me go back to 240, show you what that would look like again. So that would mean bounce here, zone like that, and then be able to gain momentum again. So that's the pattern that you would watch in order to get a stronger short setup that would offer a really good continuation type of move. And that's just one of the patterns that can form at this point. That would be a really strong pattern for that continuation move. Right now it looks like we're going to go into a little bit of a longer trading range here. You can see this is a time frame chart, 30-minute chart. The upside move this morning, pretty decent. You'll notice it is really similar to a lot of these main portions of these previous impulse moves that have that same momentum. The size of those moves is almost exactly the same. It's a little bit short compared to some of them that offered continuation, which meant that, when this hit this high that I posted in League of Traders, it didn't necessarily have to pull back as sharp as it did. It could have gone and crept higher with some slightly higher highs. So in other cases, you'll see that happening. You can see these went to the little kind of slightly higher high there. By pulling back more than 50%, you're probably around 61.8% retracement here. Maybe a little bit over it. Let's see. Oh, just a hair over it. It's still at that 61.8% zone. By pulling back that far, going past the 50%, it means you're more likely to hold in this trading range. So this high zone is going to be strong resistance. This low zone is going to be strong support. So you're going to be looking at that holding the rest of the day. Even when things pull up, they try to go for slightly higher highs. It tends to do so more with like a 2T type of pattern. So it can go up, go into a longer trading range. It can go up, pull back, try to go for a slightly higher high, but do more of a 2T pattern. So you don't get like the really strong breakouts very often when this comes back and pulls back more than that 50%. See where we've got us fans right here actually too. Check that out. That's at 76.4% we were looking at earlier. We were actually looking at it on a smaller time frame on the tick chart. So it held on the tick chart exactly the same way it did on the time frame chart. Tick chart pulled a little bit through. Let me put it at absolute highs and absolute lows. So here it is when you look at it, the tick chart, the same way I drew it on the time frame chart. A lot of times I'll go from the first move up to and check out that to look at that zone. If you line it up with the first one though, right here, kind of move it so that it lines up there, you'll have an even more solid move back in it the next time around. So fans are really unique in that they provide excellent time levels for support where you can judge like how long something is going to take as far as like a time limit for something to hit. But you can move them to a couple of different locations and they still are going to serve as really good help for the timing. Of course, looking at things like the measured moves and stuff like that, that's going to improve your timing even more. If you see a previous low and you line that up with the 76.4, your odds of the next low holding that same zone are going to be higher. If you have a first pivot that you line up with 61.8, the odds are higher that that level at 76.4 is going to hold better. So we've got it on not only the tick charts, but the time frame charts. That doesn't happen all the time. A lot of times it might just be on one and not the other. So here it is from absolute highs to lows. And then here it is when you go to that first pivot high and the low. And it's really the same zone. So when you combine that with your 61.8% retracement level with the congestion over here, basically the midway point of that congestion is a target level. Let me draw that on here. So here's this move, here's right in the midway, straight across, kind of a straight line. There we go. That whole zone becomes a major level of support because you have so many things that are all coming together at that point. So that's what we're looking at here. Not too much different on the other indices. Spent so much time on this. I'm going to go actually and flip over and look at what we have going on in some of the other markets for you guys. So let's take a look at our Forex pairs here first. Our euro dollar, of course, this has been in this crazy range here for a while. Let me go and pull this up on the weekly time frame. Really not anything has changed from how we looked at this last week. What you've got is the main upside move here and then the pullback. Let's go and put those fans, those Fibonacci retracements and fans on here. Whoops. My toolbar disappeared on me. I'm also going to add volume here for you guys. I know some of you were asking me about volume. Whoops, not on this one though. We'll have to do that when we look at individual stocks. Let's see here. I'll put my toolbar back on there here. I meant to do that again the other day, but forgot. Get so used to using something at one spot, then when you go and move it on accident, gotta figure out, hey, where was that again? So we're right at 61.8% retracement again. I don't keep my Fibonacci tools very dark on a lot of my charts because I kind of want them to fade into the background. So apologize, they're a little hard to see here. But this is the 61.8%. So you've got that pulling to that level again where it's harder for it to break previous highs, previous lows really well, but we have it congesting between that 38.2% and the 61.8%. It's essentially a kind of two-wave type of correction in here, but it's really messy. And so what we've seen is that momentum has tried to shift and tried to slow to allow for a more rapid breakdown. We're just not getting that breakdown happening yet. So we're really at a do or die type of zone here where I am anticipating we're going to get a stronger break. We're not really seeing anything offering any confirmation for this type of move yet. So let's look at the daily chart. And here's what we're seeing on this. So what I wanted to see for the best continuation was that this kind of more sideways zone here, where it went up, shifted momentum. Ideally, what we would have seen happening was that this would have broken the lower end of that channel really quickly. That would have told us that, hey, we're going to be looking at an impulse move that's going to be as big as the one that took place basically going into last summer. So it would have had a really strong continuation to the downside. What happened, though, was it did the two-wave move, and just like previous two-wave moves, it went and held. So it didn't go into basically a shorter continuation move, kind of like we were talking about in the indices earlier in the NASDAQ. If it went into a shorter correction there, it allows it to gain momentum more quickly, goes into a longer correction, then it's not as easy to get more of a drop because it bounces more, bounces up to about that 50% point, means previous lows can serve as more support, means it can be harder to get that strong momentum going for the continuation right away. So that's what we're dealing with right now is we do have shorter setups, smaller time frame setups, but there's a lot of indecision now that is even stronger or greater indecision because it didn't go more quickly there. So this increases risk on trades at this point right now because the odds are not as strong for the setup as they were over here. So basically focusing on intraday timeframes here, looking for the setups like the little two-wave correction for the continuation moves. You can see it here on the 120-minute chart. It was still a really nice intraday move. Had the little momentum reversal. Then you're basically going for a two-wave move here as a continuation, but overall upside momentum compared to overall downside momentum, pretty similar. So makes these lows stronger support than they would be otherwise. This is kind of that tug of war issue that we've got going on here on the euro dollar. Aussie dollar, we'll look at the weekly chart first. And we are seeing, again, see how that shift in momentum, just like on the euro dollar. You get that shift in momentum. Yes, I'm totally ignoring the tail here. You get that overall shift in momentum where it's trying to go with faster momentum. So when this broke down here, it kind of paused and just did a slight pause. That actually allows that to follow through more quickly. Whereas if this went out a little bit longer, because this drop is fast, went out a little bit longer, it could have a harder time getting going until it would be able to base out even much, much longer. So if you have a move that's to the downside like this, ideally to get going on the downside again, you want that base to base out about that same amount of time when the momentum shifts like this. If the momentum is really strong, it doesn't have to base out as far, it can go more quickly. On the daily chart on the Aussie dollar, here's what we've got going on. It's the same two-wave correction like we saw in the euro dollar, dropped, and now we're doing a tilted avalanche. So now targets on the current breakdown is this move here into here. So we actually have a little bit more room on this daily time frame before the next level of support would hit on the daily chart. And that's going to be pretty close to what some of the bigger impulse waves are on the larger time frame as well. Dollar yen. Weekly on the dollar yen has been weakening. So what we're seeing here is that this is trying to go out. See that two-wave correction after the really sharp drop? One wave, two waves. So we look at the time development there and to here. You basically want to get to a point where that bases out to here before you really try to get another breakdown. So this kind of went a little bit longer than ideal. So this could still pull up a little bit longer, go into a longer base before that tries to break. Because what we also have to look at here is this as a two-wave move. So we need to see how that plays out. So this is coming off of the second move. Right now, when we're looking at like a parallel channel level, potential on that, even with strong volume and momentum, it's going to put it around here as a support level. So if that does that like that, that's not really a good setup at that point for a continuation because this base will be too short compared to the base here. Usually for the stronger continuation, you'll want the base for the second base to be about the same amount of time as the first base, or sometimes even longer. And that will usually give it the strongest breakdown. So we're kind of iffy on the dollar yen here at this point. I think what you're going to see happening is just that you're going to see different support levels here with the retracement levels, and those are going to hold. Right now we're at short-term support. This is just the first main, some of these smaller, you'll have to go down to a smaller time frame. Some of the smaller moves, this is a pretty normal one so far. So this might do a little continuation here in the middle. Right now, though, on the weekly, I'd want to see a little bit of a base here. So kind of watch this, see if this can do a little two-wave. It can do the tilted version like that, just like we saw on the Aussie dollar. So the two waves might look more like this than like this. They could even go out to a larger avalanche. That would shift that momentum further if that happened. But I would be watching for continuation short setups at this point. We rounded off a little bit, but the grand scheme of things, that momentum shift is not that big. So ideally, again, we need this to hold under the 50%. Pulls up to that 50%, that is more likely to shift the momentum a lot more. So you don't get as strong of a continuation on the downside. So the best would be for it to hold under 38.2. That would be the best for a retracement in order to get a strong continuation on the downside. We want to see it not really break past that 38.2% zone. If it goes to 50%, then it's much, much harder to get a decent turnaround where it just allows to continue. Over here is a good example. See how it pulled up? Pulls up about 61.8%. It continues lower, but it struggles to do that. Again, over here, pulls up more, struggles right away before it tries to turn around again. GLD, question on GLD. If you guys have any other questions too, go ahead and post them in the room. We'll take a look at them. So longer term outlook on gold, I'm actually bullish on monthly timeframes. Here, and the reason is because of the way this is kind of just rounding off and didn't go faster with the continuation. So since this pulled up further, I kind of think usually this will go more like this and then end up pulling back up again. So I'm not feeling overly aggressive on the short side of things here on gold, but short term, we are dealing with a decent amount of resistance and a turnaround on the monthly time frame. It was right under those previous highs on the monthly time frame. Let me show you guys the weekly again. The weekly actually had good reversal strategy. Well, maybe you could see it more on the daily. It is very close to what we've seen a lot of the market do lately. This was even the same pattern this morning. So you had that early Phoenix, you had a little bit of a bigger continuation, and then it had the surge, and then the shift in momentum is what we've seen at a lot of them. They'll go into a 2T. Let me show you the weekly. It might be a little bit clearer for you guys on the weekly. The futures chart was really the cleanest, but you can see it here on the daily here. So here's really similar to that NASDAQ. Let me go and show you that NASDAQ again. You have almost exactly the same series of price development on gold off that high. Where can I put this so you can see this all? Squish that up. Okay, so look at this here. Look at how similar these are. Goes here, has the correction. Goes here, has the correction. Goes up, second, up, second. 1, 2, 3, 1, 2, 3. So this is where I said at this high, remember I said, hey, this is going to be a good correction zone. It won't necessarily always turn it around. So the NASDAQ actually pivoted at that point. It held with a really small momentum reversal. The gold went and formed a bigger one. So it had a larger one, and NASDAQ fell faster. So you're right here compared to here. But the overall series, very, very similar. So right now what we're looking at is, similar type of risk going on in the overall market as compared to gold. Gold's struggling to try to regain strength. It actually is favoring even the potential that that could go and go into a longer base and pull back and do that drop again, like we saw coming off of the high in here, kind of shifting momentum and turning back around and dropping more quickly. So that's what I'm watching for on here. It's will it react to this previous low? If it kind of holds this zone, sometimes you'll even see it kind of tilted too. So it might even go to a slightly lower low, still pull back up, break that channel, and then go again. That actually can trap people on the upside when that happens. So this becomes one of those do or die points when that happens. You can buy it, but if momentum doesn't immediately soar, you're more likely that it's going to be a two-wave bounce and then drop again. So you have to, if you buy it here, put this a different color. You buy it here, maybe you get like a two-wave move there. It could go and, form a larger phoenix on a larger time frame, but it could also base out and do that larger channel. So you have kind of that either or type of thing that develops there. And it means that you've got to use advanced trade management. You don't want to take a channel break as an entry because you can end up with just a pure trap pattern if the momentum is not fast enough coming out of it. That retest there on that fib support has served as a really nice little tiny phoenix on probably about a 1 to 2 minute chart here on the NASDAQ right now. Momentum is the key always, absolutely. So I'll buy something, and this is where you have that difference between people that take full stops a lot when something doesn't work out versus, hey, I could still get a gain on a trade even though it might fail and break down, because I'll be looking to buy with that measured move into support. But if it doesn't get going, or how it plays out, I'll take something off as it comes up into this upper channel. I'll look to add on a correction. If it slows, changes momentum, I'll use a bounce to get out of more of it. So even if it does go and ends up gaining momentum, hopefully I have more time to add back in the contracts that I've taken off. But even if I don't, I'll have steady gains. And if it ends up failing, I can still have made money on a setup that ultimately broke lower by managing it the way I do and even going and reversing the play at that point. So you'll actually see that pattern that I just drew out, you'll see that play out many times over and over again. So I'll buy it. It won't work out on the long side. Ultimately, it would have hit people's shorts if they had a stop under that low. But because of how I manage the play, I can still come out and walk away with a gain on it. It won't be as much of a gain as if I held the entire position and it does work out because I might not have fully had a chance to add back in, but it means that I've got steady gains in my trading account because of how I will manage it. And that's a trickier thing to teach traders. It's on the advanced level of trading. I know a number of you guys have been with me for years, though. So a number of you are at that level to at least be able to comprehend what I'm talking about and the difference that it will make in your trading. Some of you aren't quite at that level, though. So it can be more important for you guys to stick to trading some of the smaller channel breakouts instead of like buying the absolute support level. Also looking at using a channel break from a momentum shift. It's not as good of an entry, but it's way better than taking a bigger channel break entry. Right, the protection and lack of damage to account rules supreme. Exactly. I'm not looking for home runs, you guys. I mean, how many baseball players really do? They don't. They're looking to bat and get to the bases. They get a home run, yay, awesome. If you get a pause at each of, base or whatever, and you can bring your team in, perfect. But you don't always get that. So it's much, much better. Yep, they do the best they can with the pitch they are given. And sometimes you get a pitch that awesome. It goes, has the strong momentum right away. You don't need to protect as much at first resistance because it's probably going to keep going. But if momentum just can't get there as fast and it looks like things are struggling, then go ahead and protect some of your folks. Just worry about the basing. I know that baseball analogy, I'm going to have to use that again. Let's see here. KTOS. Yeah, I promised you, Jay, to take a look at this one, didn't I? So here, this is an example where you got that momentum that picked up immediately off of support. You give that bounce right away. Look at that move, right off of that 61.8%. Even better when you're tilting it and looking at the entire low. So a lot of times your fans will be better if you use the low right before when the momentum's totally picks up and you got the stronger move. A lot of times that will hold better. So notice it went and immediately did a two-wave move off of that support. That tells you, hey, this is going to keep going. I don't have to generally take as much off. Even though this is definitely the first level of resistance, I wouldn't have to protect as much there as I would if this had a harder time, because that would mean that it could base along here and end up breaking down. So if that happened, I would still usually go add in when it retests the low. I'll take the partials with the two-wave measured move, usually take more partials than I would otherwise, add back in, exit some as it's bouncing, then if that channel breaks, it will totally reverse my position on the rest. So if I'm entering right at that support level with the two-wave measured move into that support, I don't have a single contract, or in this case, we got shares, but I wouldn't have a single share that would take a loss, even though the trade technically would have failed. Now, you get moves like this, you can go and add back in. You can add back in with the gap for the gap strategy. You might even see something within the range that could get you into it ahead of the gap. Low volume, this is where A lot of people are, the one guy, he told me this at the expo when I was speaking on Wednesday. He's like, I don't know how you can trade validly basically without having volume on your chart. Do you need volume to offer your confirmations? Obviously, you guys don't see me use volume too much anymore. I like to use it to get, when you see volume really low on the pullback, that tells me there's more confidence in it. I don't worry about it as much though on a move. When it's actually breaking out, I want the volume to be higher than it was over here, but let's see what that actually looks like. It's not to a degree that I worry as much about it. Indicators. What do I do with it? I'm telling you guys, I'm not used to the setup like this. There we go. I keep my charts one way and I don't mess with them. So here you've got the volume dropping over here. And in general, this volume is pretty decent. I mean, it's the strongest you've got quite a while. Overall, KTOS isn't like a huge volume stock, so you get these spikes in volume when anytime anything happens. So I would say that that's a pretty decent volume move though on the breakout. You don't have it confirming day after the next, but that's normal. It's normal for volume to drop as the move continues. So same thing on the downside, maybe to a little bit of a bigger extent because volume will keep increasing as something is going into the low, and then you'll have the spike in volume. So as something's moving lower, volume's increasing, and then the stock can still keep going lower. Volume will spike again, but maybe not to the same degree that it did on the first move. So this is actually pretty typical for volume play. And again, you get so used to seeing it over time, you don't even necessarily have to keep it on your charts. I don't know that we're going to get this to be able to continue here because we've got our Phoenix, we've got our 1, 2, 3, and then we've got momentum shifting. So you're at levels like this where we just saw examples where it can go and do things like a 2T or a momentum reversal or something like that where it can push to new highs, but it doesn't have to. Many times it might just give you a slow start to correction, gain momentum, and pull back in. So we'll start slowly. Let's kind of erase that there. There. Start slowly, go like that, and gain, and pull back in. That can happen too. So you don't know how that type of correction is going to unfold. You just have to take your best guess. So usually you'll get a little, even when it pulls back and continues to hold, it's really common to give you this little initial pullback, spike to a slightly higher high, and then decide which way it's going to form. So a lot of traders might see something like a 2T in here or in here. We saw this, you guys in the room. I know I'm going to keep picking on you. We saw this in the room, I don't know, is it Monday, Tuesday, something like that. In the forum, you guys were talking about 2T, and I said, it needs to wait, something like that, and needs to go, did a little bit, gave a little scalp, went to a higher high, then formed a better reversal. So you can trade that reversal on the intraday chart, but it might not fully get going. In fact, it would be really odd for it to go and just do that sharp drop. That sharp drop is less common. It might start off quickly, but then not sustain itself. So it might have a sharp drop, bounce back up, another move that looks like a sharp drop, then go into that base, then really have a sharper drop. That can play out like that. If it goes into a 2T again, though, that's an even better setup. Kind of changes the momentum even further. Do I look for earnings report as a place where if it's at a key Fibonacci level, it may have a larger move? Absolutely. So, for example, like this, you have it coming off of that 76.4% Fibonacci fan, and it's also probably around 61% Fibonacci retracement. Let me put that on there. Yep, exactly. At it. Like literally to the T. Then basis at your 38.2. So yeah, you've got a perfect move when you're going into like that's earnings there. Then the odds of it going and having a much more solid, rapid move are going to be a lot greater, especially since this gap really was not that big in the grand scheme of things. This is a pretty decent sized gap to get a trend day, at very least a trend morning. And because of the larger pattern, you have a greater chance that it's going to go for even the potential for a measured move or more if momentum picks up. So yeah, great question there. Does the weekly, monthly chart play or offer cues to directional bias? Right now, let's go look. So here's the weekly. I'm going to start with the monthly. I like to start big and go down. Monthly bias is bullish. I can tell you that right away because we've got something that is trying to gain momentum here. So you've got the momentum reversal, kind of momentum reversal plus halfway between that 2B down here. Slower start, 2-wave correction, and now it's doing basically a tilted phoenix coming out of this. So this is your 2-wave correction. In other circumstances, this would look like this. So this portion is actually tilted to the upside. You just take this whole zone and swing it up. That's what you've got going on. So technically this is a breaking out of this 2-wave correction here. And this can go into even like a 1, 2, 3 a lot of times. So monthly on this is actually looking pretty good. It's just the daily is not at the best placement. Let's see weekly. Yeah, so I mean, this could basically go and do like a bigger 1, 2, 3 type of move. This is not something I would want to short at all, even though we're at resistance like we saw in the daily time frame. If you're invested in this, I think you've got a pretty good position on your hands. You're welcome, guys. All right, well, we're going to wrap up here. And I'm going to be back here Monday morning for League of Traders Mentor Monday. We are going to be talking about scaling into and out of position. So basically, we're going to be looking at the difference between the type of setups we were just looking at. You know, when you get the breakout entry on a trade versus actually buying the support level. And how to do that and have confidence doing it. So that is what Mentor Monday will be about at noon Eastern for those of you that are in League of Traders. Richard, really quick, what other indicators do I use to help me confirm my thoughts where a stock is going or where is a good place to enter? I mean, Fibonacci is a big one. It's just really easy for a lot of people to use, and you can get to a point where you can visualize it without even having to draw on the charts. but I don't really use any other indicator. Volume you saw can work. For example, when you get like the lightest volume on a correction, that can be an excellent place to look to buy a trade, but you won't always have that confirmation. And a lot of traders are like, oh, I don't have volume confirmation. This trade is going to be horrible. I just need to get out or blah, blah, blah. I'm like, I don't care. It's as long as the momentum is there, that's going to help you. Volume is always a bonus, but it's not always there. This could be where, we're talking about the lighter volume compared to like some of the previous moves. And a lot of times, by the time you see volume picking up anyways, you're too late to get into a trade. You've missed it. All right, guys, I'm going to head on out. I got to go finish up my PowerPoint and get that turned in here today. Is volume considered a momentum indicator? I guess to some degree, you could say yes. You are welcome. Yeah, I will have this posted by the end of the day. So you'll be able to go back and review this here over the weekend. Lots of stuff to study. You're welcome, guys. I'll see you next week.